Good morning, good afternoon, and good evening, everyone, to our global audience. Welcome. My name is Tim Ogden. I'm the Managing Director of the Financial Access Initiative, a research center housed at NYU Wagner that focuses on how financial services can better meet the needs and improve the lives of households around the world. And our topic today is talking about what's going on with remittances. Remittances are a huge part of the financial lives of low-income households around the world and play a big role in the development of financial systems. But with the pandemic, many of us who look at issues of migration and remittances became very, very concerned that we are going to see a radical drop-off in remittances with very serious negative consequences for lots of low-income households in many countries. And so we were prepared and looking for this data to show a drop in remittances. And then a strange thing happened. After a dip, immediately after lockdowns in many places, the data seemed to show that, in fact, in many places, remittances were rising, the exact opposite of what we expected to happen. It's a big mystery. And our topic today is to understand what's really going on with remittances. Why might we be seeing an increase in remittances in the numbers that we have? Why that may not be, in fact, what's happening on the ground or may not continue, and what that means overall for low-income households and for financial system development. I'm joined today by Leora Clapper, who's an economist at the World Bank and the founder of the Global Findex. And if you don't know the Global Findex, you absolutely should. It's the best data that we have on financial system development and financial inclusion around the world. And Joe Bavier, who's a business reporter for Reuters Africa, who's been looking into this story from the African perspective. To get us started off, though, I wanted to get some information from the ground. And so earlier this week, I talked to two leaders of MFIs in two different countries where global international remittances play a big role in the economy, El Salvador and the Philippines. Esteban, would you play the videos for us, please? Ms. Victoria, thank you for joining us. There's a lot of conversation about what's happening with remittances. The Philippines is a very important country where it comes to remittances. There's a lot of typically remittance flow to the Philippines. Can you tell us what you're seeing in terms of how the pandemic has affected remittances with your customers?
Actually, our clients who are members of also microfinance institutions were affected by this pandemic. Most of them, there are delays in the payments of loans for their businesses because of the delay in the remittances, and some of them was not able to receive the regular remittance from their families abroad. So the impact is great. Some of them have to stop their business or close business or withdraw their savings with us. So it's really have a very great impact of this pandemic.
Have you seen overseas migrants returning home, and has that affected the prospects for future flows?
According to the report of the Department of Labor, close to 250,000 are now back to the Philippines, and we do believe that more are coming home. So it's a big challenge. Although now they said that some countries are opening their doors again for selected skills for overseas Filipino workers that can be hired abroad. But what we can see is more Filipinos coming back to the Philippines. So it will create another problem in terms of employment or start a business. And remittance definitely will also be affected. There might be some decline in terms of remittances.
Do you think what will that mean for your operations? Does that mean a greater demand for credit for people who have returned home and maybe starting businesses there? A demand for credit to enable people to migrate again? So, as you mentioned, some challenges with repayment of existing loans.
What we can see is there will be a bigger demand for microfinance because what is happening right now is people would like to start a micro business just to survive. And we are doing also some coordination with the different government agencies on how we can work together to support the returning overseas workers who are there are no jobs in the Philippines, but how to start a micro business that is very important to survive right now.
And what do you expect? What do your customers expect is going to happen over the next 6 months in terms of their ability to receive remittances? Are they expecting to be able to migrate once again?
Some of them, they said they're still looking for opportunities abroad. Those whom we were able to contact with right now in the Philippines, they said their income, whether in other countries, are still they can really survive for the whole family. The micro business here, they said it cannot supply the needs of the family. So given the new opportunities to go back to other countries, that's their desire right now also. So the business that they would like to start is as if temporary only, just to have some to survive for the basic needs for their families.
Well, thank you very much, Mr. Victoria, especially in light of the recent typhoon in the Philippines. We wish you and your customers very well in the recovery.
So thank you very much, and I hope this will help us. Also, we're doing some planning for the future on how we can really effectively help overseas workers. What we're doing right now is we're doing online training for overseas workers based in Singapore. Uh, it's what we call them a back-to-back training, where we train the overseas workers in Singapore. At the same time, we train their families here in the Philippines. So in the event that they are ready to start a business, at least they know each other. They have the same dream. They have the same aspiration. So what we can see is that will start a good business in the Philippines. That's what we're doing right now, more on business entrepreneurship, financial education to start a business in the Philippines. Thank you.
Excellent. Thank you very much for your time.
Yeah, thank you also.
Sir, can you explain what you've seen in the flow of remittances? Are they increasing or decreasing or staying the same? Sure, with pleasure. During this period in 2020, there has been some variation in the flow of remittances compared to 2019. For example, April and May have been the most difficult months, with a decrease of between 15 and 18% in the flow of remittances due to the economic closure in the United States, which is where most remittances come from in El Salvador. Subsequently, it leveled off in June, July, August, and in September we've had an increase of approximately 20% compared to last year. More than 550 million in remittances were received during the month of September alone. And these changes, these ups and downs, how are they affecting your customers? That is, the flows that increased being used in different mechanisms or methods. During the most difficult months, which was the beginning of the pandemic, starting in the third week of March in El Salvador, the flow of remittances also decreased, and that affected all of our clients' payment capabilities. As a result, we have made some adjustments to our portfolios. For 6 months, we have moved their fees towards the end of each period with the aim of keeping them up to date and not having difficulties in payment and being able to somehow alleviate their cash flow problems. The most difficult month was May, when we had to adjust approximately 45% of our customers. Now in October, we only had to adjust 6% of our customers, which means we observed an improvement in the flows. The economy in El Salvador started reactivating in August, and as a consequence, things are now getting back in balance. And have these changes affected your operations? Have they affected your operations? Yes, definitely. Our operations decreased considerably. We have had a drop in portfolio of about 10% because of the pandemic. As the economy came to a standstill, we have not been placing credit either, and we have only been focusing on reimbursements. Now, as of October, the economy is once again reviving, and we are considering recovering our portfolio by December compared to December 2019. And what do you expect to happen in the coming months? Will it continue as it is now with the return of the economy, or are you afraid that things will slow down again? What we see is that there is commercial movement, that the economy is being reactivated, right? And we hope that no more difficult things will happen than we are already experiencing. Everything will depend on the fulfillment of all the biosanitary measures, and that we maintain the necessary care to be able to maintain the economy. If there's a second wave of the pandemic, then it could affect us. Recently, we had the effects of a hurricane that did not reach El Salvador. Thank God it did not much affect us. The effects were more in the neighboring countries, uh, Nicaragua, Honduras, Guatemala, but there are still some effects in our country. But we hope that the economy will be reactivated by the end of the year, which is what normally happens in our country, originated by the end of the year celebrations, originated because the harvest begins, the sugarcane harvest begins. This generates a lot of commercial movement in rural areas. And finally, have you seen clients or their families or relatives returning to El Salvador, or a change in the number of people who have hope of moving to another country to look for work? No, right now we don't have those movements, at least in our clients. What we do perceive is that we have more movement of remittances to El Salvador. Some people consider that this is because of fellow nationals in the United States who are with TPS, temporary protected status, and who most probably will have to return, are moving their savings, their patrimony to El Salvador in anticipation of being expelled in the future. Well, thank you very much, sir, for meeting with us to answer all questions about remittances in El Salvador. See you some other time. Thank you very much for your time. Very kind of you. Nice to meet you.
So, a couple of different perspectives on what's happening with remittances, with some general themes that come out of this mystery that we have seen. In the Philippines, it does seem that the remittances have fallen dramatically, in line with what many experts expected. But the El Salvador story is that other side of the coin, that remittances didn't really fall very much, and in fact, in some cases, have increased. And provided possibly one of the answers is that migrants are sending their savings home, and what we see in the data increasing is not really about the standard sort of flows we see in remittances, but is emblematic of people being more concerned about what's going to happen in the future, and possibly the issues of losing jobs and having to return home. We see data in a couple of other places similar to this. Esteban, if you would share my screen, I want to show just quickly a chart here from the Rishapara Diaries. The Rishapara Diaries is a long-term financial diary study in Rishapara, Bangladesh. It's a rural part of Bangladesh. I know the slide is small. I want to focus on, I think it's yellow. I'm colorblind. Leora, is that yellow?
Yes.
The yellow bars, where you see fairly consistent incomes from overseas remittances up through April and May, and then this plunge before things bounce back significantly, even to a level above where it had been in the past. In another area of Bangladesh, the garment worker diaries that are following garment workers in Dhaka, they've been following workers for several years and asked them specifically about what was happening with remittances, both things that they were sending, particularly because these folks were employed. And you see that 60% of them reported that they were sending less money or sending it less frequently, although 20% was saying that the pandemic had no impact. And so, this sort of gives a flavor of the disparate data that we're seeing. We can hide the slides. Joe, I want to turn to you here because I think from our conversations, you had the same worry that many other people did, where you are based in South Africa, seeing economies shut down, knowing that in South Africa there are a lot of migrants from other Southern African countries, and decided to ask the question, what's happening with remittances in those south-south corridors in sub-Saharan Africa? Could you tell us a little bit about what you found?
Right. So South Africa had a very strict lockdown imposed very early on in its epidemic, and we saw huge sectors of the economy shut down. We had stay-at-home orders. We had border closures, most of the work that we've done since the pandemic started is writing about the pandemic and impacts on the economy, impacts on business. And we decided to look at remittances, and South Africa was a good place to check it out, just because it is a regional destination for migrants. You have a huge population of Zimbabwean migrants, and they work particularly in sectors that were heavily affected. So they were domestic workers who were told to stay home and often, not given anything by their employers. They work in restaurants, which were all closed. They work in construction, which was one of the sectors that was shut down. And we had an expectation that there would be a lot of suffering going on in those communities, and subsequently a knock-on effect back in Zimbabwe. And we looked, as I think everybody is familiar with the World Bank forecasts, we started from that thinking that we would find, a story of suffering. And when I started out reporting this, I was, before we go out and start looking for people to talk to on the street, which was already complicated at the time because we needed special permission just to get outside. I looked for some data, and to get kind of up-to-date data on what was happening, I started just kind of touching base with some of the executives from money transfer services that specialize in intra-African transfers. So, they handle transfers from Zimbabweans back to, in South Africa back to Zimbabwe. But also we looked a bit in East Africa. You have a lot of Somali migrants in Kenya, for example. In West Africa, where you have particularly Ivory Coast as the destination for regional migration. And what we were hearing over and over again was a bit surprising. It was, as kind of the data that you mentioned earlier indicated, everybody pretty much saw a dip in mid-March, that kind of carried into April. But what pretty much all of them said was that there was a quick bounce back and even growth in customers and even transfer volumes that outstripped the previous year, the pre-pandemic period, and also outperformed their forecasts. And yeah, I mean, this was all happening in Southern Africa, at least, while the economy was still shut down, while the borders were still closed. Most of Africa had some form of lockdown. Most of them found that they couldn't maintain them very long. So workers, informal workers have to work anyway. So I think in a lot of places, people just didn't stop working. But in South Africa, it was a little surprising. And so then we moved to actually talking to migrants about what might be behind that. And it turned out, it wasn't that there wasn't suffering. A lot of these guys were out of work, but they were still finding ways to send money home. And traditionally, the majority, I think, in Africa of money transfers go through informal channels. Zimbabwe, from South Africa specifically, they go via the buses. And with the shutdown of the border, the bus services had stopped running. So the option that a lot of migrants had been using for decades to send money home had disappeared overnight. So what we believe happened, and what subsequently the central bank has confirmed yesterday, is that there was a shift in method. So migrants moved from sending their money via the informal networks to formal channels, formal services, and particularly a lot of the newer fintech-driven services that allow you to send money via your mobile phone. And a lot of that was done kind of word to mouth, and word of mouth. And so somebody in the community has been using this, and then their neighbor or their friend suddenly finds that he can't get money home, and so you saw a lot of people using new services. It's important to be clear here. We're not talking about the overall flow of remittances. There was an increase in the flow of remittances via these services, via these formal channels, which was a boost for these companies. But we're not saying that there was an overall increase in remittances. It's just that the captured data indicates that more was going via these channels.
Thanks, Joe. And that's Leora, a great place to sort of bring you into this conversation, because you're a specialist in trying to measure what's happening with development of formal finance. And this has long been a problem in understanding remittances, is that so much of the flow, the development world discovered remittances not that long ago and hadn't really been looking at them because so much of it was informal and not being captured in reliable data. It started to sort of be counted, and we realized, oh my gosh, this is this huge flow. And now we're still at a level of this point where we just don't know that much about what's going on, because we don't know how much is going that we can see and how much is going that we don't see and how that changes. But could you help us take a step back and sort of think about remittances and migration in the big picture? How much money is moving? Where is it going? And how should we be thinking about sort of overall remittance flows in terms of its effect on low-income households around the world?
My pleasure. May we pull up the slides, please? Thank you. Perfect. So yes, I'm going to start with some macro data. As Tim mentioned, I collect the global Findex data, which is based on interviews with over 150,000 adults around the world on their use of savings, credit, and lots on payments, including remittances. And so, again, this is a good example of why it's so important to listen to people, to understand both their behavior and also explain the mysteries of why they make some of their decisions. So starting with this slide, This figure is pre-COVID, 2019, where we saw massive growth in remittances in the past 10 years. But internationally, the World Bank expects international remittances to drop by about 15% by the end of 2021, largely as a result, as what Joe mentioned, the rising unemployment among migrants. And though the decline will affect all regions, the steepest drop is expected in Europe and Central Asia, where it's expected to decrease by more than 16% in 2020. As Tim mentioned, at the country level, COVID-19 has had contradictory impacts on remittances. As it hit Kenya, remittances initially dropped but began to recover in April before hitting record highs during the summer. In Mexico and Pakistan also saw sharp rises in remittances, while the rates remained pretty much constant in Vietnam and the Philippines. So to add to Tim's introduction, let me first back up on why do we care, right? So as Ronaldo mentioned, remittances are a vital financial source for developing economies and have all sorts of developing benefits. And just mention some of the academic literature. Remittances help people increase spending on necessities. When Filipinos migrated to South Korea, we saw families back home spending more on schooling and healthcare for their children. They also increased their savings, were able to reduce their borrowings. Remittances help people manage financial shocks, which I think is a lot of the story behind what Joe is finding. So for example, one study found that when hit with a health emergency, the average Mexican household doubled their debt burden. But there's no effect on households which got remittances from a relative living in the US. And remittances have also been shown to reduce poverty. And so in addition to these, the change in the mode of payments being sent from cash to the formal means, what we're also hearing is simply that and we find this in the Findex data, we ask people if you had a shock, an income shock, and you suddenly didn't have enough money to pay for a healthcare emergency or to buy food, loss of income, what would be your main source of emergency source of financing? And the number one response by a huge margin is family and friends. And a lot of these family who are living overseas, are finding a way to send more money home or working, if they have access to additional informal or gig jobs, they're working them, they're depleting their savings overseas to try to support their family, at least as they can in the short term. Next slide, please.
There we are.
Thank you. So this map is showing the biggest remittance corridors. So simply that the US-Mexico corridor is by far the largest in billions. Also to a smaller amount, large flows between Germany and France back to Eastern Europe. To hone in on just the importance of remittances, if you look at Bangladesh, received US $18.3 billion via remittances via the formal channels alone in 2019. 73% of which came from the Gulf countries, which are, especially with the uncertainty around oil prices, suffering economically at the moment. Remittances is the second largest source of foreign earnings in Bangladesh. And just to emphasize how crucial this financial flow is, remittances in 2019 were the equivalent of 30% of the national budget, or 6% of total Bangladeshi GDP. So the next slide, please. So this is interesting. So Gallup collects data annually, called the Gallup World Poll, an opinion poll in over 145 countries around the world. And these are questions that they ask. How is your standard of living? How is your food security? What I did here was looked at this is only for the Gulf countries, for Saudi Arabia and the UAE, for which we have post-COVID 2020 data, and calculated some averages of adults who say they migrated to the country from a developing country. Gallup asks, from what country did you migrate from? And so, as we discussed, this drop in remittances is due to both unemployment and economic decline in the host countries, plus a massive movement back home. And so first, let's talk about, the case of Bangladesh. Between February and March 2020, more than 200,000 labor migrants returned to Bangladesh as the pandemic caused mass business and industry closures in the Gulf countries and in Malaysia and other countries where Bangladeshis were working. And left, hundreds of thousands more Asian migrants were left unemployed in the host countries as well. And for those who stayed behind, their economic conditions have very much deteriorated, as shown by this figure. So for example, and these are mostly workers from South Asia, the Middle East, and North Africa. About 1 in 5 said their standard of living is getting worse, and almost a third are reporting food insecurity. And so this also has implications for the amount of money remittance flows going forward that migrant workers will be able to send back to their families. So next slide, please. And so I guess the last slide I want to talk a little bit about. Oh, sorry, if you could jump one slide. Thank you. Perfect. So this is a separate but really, really important issue is domestic migration. And so, as we'll talk about, it's expensive to move internationally to work. And typically, as household income increases, it increases the likelihood of having a migrant family member. And even on the country level, it's wealthier middle-income countries which have higher migration rates. But domestic migration, moving to another area of the country to support your family, is very high, especially in sub-Saharan Africa. So this is data from the Global Findex, where we ask a question: do you send or receive money domestically? Do you send or receive money to another part of the country? And so the length of the bar are you sort of roughly divide by half the percent of adults who have domestically migrated, moved to another area of the country to work and are sending home money. And so, the share, let's look at these numbers. On average, in developing economies, about a quarter of all adults send or receive domestic remittances, and that share is twice as high in sub-Saharan Africa. So we could proxy that about a quarter of all adults in sub-Saharan Africa have moved to another part of the country to work. And so overall accounts are the most popular way to use domestic remittances, you can see here. So people are sending money and increasingly using mobile money accounts, for example, to reduce the cost. And so I will stop here, but just really to emphasize the importance of remittances both on the household level, also on the country level, and it's both international flows, but also even within a country.
Thanks, Leora. I was really struck in the two interviews how closely tied both the MFIs found remittances to be to their repayment rates. I've been talking about microfinance and remittances long enough that it's somewhat remarkable that MFIs are really taking into account part of the creditworthiness of households is whether they're connected to a migrant, to a city or to another country. In the comment section, I think all of the viewers can see, I've done some work with Michael Clemens of the Center for Global Development, trying to sort of establish this mode of thinking that remittances aren't some weird flow of money that we should think of differently. Remittances are income. They're a return on investment. That they're part of a household financial strategy. That in most places we find when we go and talk to migrants, they are investing in migration as a family, as a household, to say who is in our household is best equipped to earn money for the household and where are they best equipped to earn it. And that's often someplace different from where they are right now. And so they pool resources to enable someone to migrate because, as you noted, Leora, migration is expensive and difficult. And they expect the remittances, that's just in the same way as a paycheck. This is the paycheck that people get for a job, and it flows through the family. Thinking then about remittances as part of overall household finance, I think sort of opens some other vistas for us to think about what this means, what the pandemic means for remittances, what the pandemic means for microfinance institutions because of what it means for remittances. And what it means in these households. And Leora, you were closing there on this idea, on this point that flows within countries are very important. Our data are, I would argue, are probably even worse than our international data because there's so many more informal channels to move money around. Although, with mobile money, we're suddenly getting a much better handle on how much money is flowing domestically as mobile money systems make it a lot easier and more efficient to send that money. I'll comment for those interested in domestic remittances. The best stuff that I know of right now that is really, sort of personal is some of the stories coming from the Kenya financial diaries that FSD Kenya is doing, where they're talking to folks in Kenya who have had to return to home villages, have lost livelihoods in cities. So we don't have comprehensive data, but we do see that mobile money flows are way, way up. But we also see that a lot of people are struggling. Joe, I want to come back to you because you're covering the economies of Africa generally and from the business perspective. So what happens next with the remittances really is based on what happens in the economy. What's going to happen with jobs in different places? Are there going to be opportunities for migration? Are there going to be opportunities for migrants? Are there going to be need to migrate to cities from rural areas? Is there going to be the ability to find jobs in those places? Could you give us a picture on, from your perspective, reporting on economies across Africa? Where are things going? I know there are some free trade agreements being signed in different parts of the continent. I know there are a lot of concerns about sovereign debt. What do you see?
I think that you're going to see, well, first of all, Africa has been spared the worst of the pandemic in terms of the health impact, which is really a concern early on due to kind of the state of the health systems here. That doesn't mean it's going to be spared the economic impact, unfortunately. And it's likely to be quite severe, though it's going to be quite uneven as well. I think that we do have the African Continental Free Trade Agreement, which is an Africa-wide free trade area that was, something that's been in the works for years. It was meant to be implemented on July 1st. That was delayed because tariff negotiations couldn't take place. They've kind of put that all on Zoom now, and it looks like they'll launch probably in January or sometime early next year. There's big hopes for the free trade area. It should foster much more intra-African trade. Unfortunately, the majority of African countries, their main trading partners are not on the continent. There's a lot of trade with China. There's always been a lot of kind of trade with Europe. And the idea is that they want to encourage more cross-border trade, which should make lots of things cheaper, should benefit in job creation. But that's going to take time. So I think that the main concern, the immediate impact, in what will hopefully soon be the aftermath of the pandemic, is the kind of accelerating effect of the pandemic on things like sovereign debt. We had on Friday Africa's first pandemic-era sovereign default with Zambia, which failed to make payment on a Eurobond coupon payment and has also had issues with Chinese debt. We have kind of a laundry list of countries that were already in a precarious situation that's only been made worse now by the impact of the pandemic. A lot of the economies that were shut down in the developed world, their demands for the things that China exports also diminished. And so countries that, for example, copper prices, for example, are at a 2-year high now. But, lots of the kind of metals output, a lot of the natural resources output just disappeared overnight during the pandemic as developed economies shut down. And that was painful. What I think we'll probably see is, to be honest, a lot depends on the developing world, the developed world, the rich world's proposed remedies for the poor countries of the world. The G20 has agreed to earlier this year a debt service suspension initiative that allows countries to apply for relief. Unfortunately, that's only on bilateral official debt. And the HIPC program that was instigated in the 1990s and granted debt relief to a lot of these countries through the 2000s was done at a time when the majority of these countries' sovereign debt was held by bilateral creditors. So the Paris Club could get together and say, okay, we'll do this, and it was done. The creditor landscape right now is so much more complicated. A very small amount of the overall debt load of the African continent is now official bilateral. You have a lot of commercial debt. You had a Eurobond spree, which is also a major problem now, and a lot of relatively opaque Chinese lending as well. So it's been very difficult to come up with a coherent strategy in how to help these countries with the debt. There should be something approved this weekend by the G20 to try to improve coordination between Paris Club and China, for example. But it doesn't look like much of this is going to have a long-term impact. It's just kind of allowing a bit of breathing room. So I think what we'll see is a kind of a domino effect of a number of countries really struggling. Zambia, we should take Zambia for an example, because we want to look at kind of the impact on migration and then eventual remittances. There are fears that Zambia will follow a similar route to Zimbabwe. It's a sovereign default. They can't borrow money. They have huge deficits they need to finance. They've struggled with their relations with the IMF, so it doesn't look like. It should improve now. I would think now that they have to go to the IMF, but it's going to take time, and there's going to be austerity. There are going to be currency problems, and there's going to be an impact on the domestic economy in terms of job losses, in terms of currency fluctuations. So I expect you'll see more Zimbabweans set out to probably South Africa initially, I would think. And you've got Zambia, you've got Angola, Kenya has debt problems. Ethiopia has debt problems. All of these countries, Ghana, Nigeria, even, those impacts, particularly of potential austerity, could push a lot of people out. I think I'll just leave it there for now. But it's not looking good.
Yeah, that dynamic that I think is really interesting is typically what we see when countries get into serious economic trouble is you see an outflow of migrants, and that is a safety net of sorts to lower income households who can't all migrate, can't sort of cope with the situation. And now because of the pandemic, it's really unclear whether that migration safety net is going to be available as it has in the past. And we do see the potential for a serious civil war in the Horn of Africa with Ethiopia and displacing people. So there are some definitely scary things there. Leora, one of the things I've been thinking about a lot in the pandemic is how microfinance has thrived in some way because it has decoupled what's happening at the base of the pyramid, at the grassroots, the ability to make these small loans to small households, local households, that aren't affected by global issues, but then finance their operations. The capital that they're lending isn't coming from the local communities; it's coming from these global sources. And so the industry has been really, really resilient to past crises, because if you get a global financial crisis, that doesn't affect repayment because it doesn't really affect the households who are actually borrowing and paying. Or if you have a local crisis, say in Zambia, it doesn't affect the MFIs' access to international capital markets. The pandemic, though, is pretty different, and particularly as it relates to remittances, is that global capital markets are frozen at the same time that grassroots activity is frozen. And now you have this issue of remittances as we better understand how much remittances were financing a lot of grassroots economic activity. From your perspective, what do you see happening with global flows? Who's going to migrate, and what that means for financial systems, the MFIs themselves, mobile money systems, these more interconnected parts of the global financial system now?
Thank you. Big question. With sadly no easy answers. If you could please pull up my last slide. No, absolutely. There will be a sovereign debt crisis. There might be a financial crisis. We're certainly seeing a real sector crisis. Even the U.S., most recent data from the U.S. Census is showing, massive rates of, both food and even the U.S. of people fearing foreclosures, on being evicted from their homes, of food insecurity, of job losses, which will continue. And so, whereas we're seeing,
throw in that comment, Leora, just so that I think people are probably broadly unaware of this, but in some states in the United States, 1 in 5 people are reporting that they're concerned about being evicted in the next few months.
Yeah, which is again shocking. And at the same time, we're seeing fiscal austerity and this huge demand for foreign currency, hard currency flows into developing countries. And so this is historical data. So this is to the historical being anything pre-COVID at this point. So going back to the Gallup World Poll opinion data, they asked in 2019, they have a question: would you like to move to another country? It gets a little finer around, are you making plans? Are you planning to move? And what perhaps some of you listening from the region won't be surprised to see, over half of adults in many of the Balkan countries would like to move and are planning. Actually, the follow-up questions are planning to move or have already, started to pack their bags. According to this data, half of adults or more in Albania, Kosovo, as well as Dominican Republic and Honduras want to move to another country. As well as about a third of adults in Peru, Colombia, and Chile. And as we've been discussing, we know that migration increases with household wealth. It's as Tim nicely said, migration might be the household investment with the highest payoff, but the crisis might impact future migration flows. This weird conflagration of greater demand to migrate from people and adults in developing countries, where at the same time the length and depth of the recovery in high-income countries is going to matter. Certainly, where I've worked in, Georgia and other former Soviet Union countries, where there's great migration to staff hotels and other service industries, restaurants. Those jobs have dried up. In the U.S., they've been hit very hard, the whole service industry. And so if you think about, lower paying jobs that migrants often are employed in, especially, thinking about the high U.S. In Europe, when those jobs will return is yet to be seen.
I failed probably in my moderation duties and letting everyone know that they can post comments or questions on the site. So we all will be looking for those. We've got a few in there, and we'll bring up in a second. I want to sort of wrap up this section. Joe, one of the things that you found was that the remittance senders, the money transfer companies, really do think this is not a change in the amount of money being sent. It's a change in how the money is being sent. But that's not insignificant. If this amount of money is being moved through different channels, that can have some knock-on effects. How are the money transfer companies that you talk to thinking about this shift? Is this a permanent shift? Have they just expanded their market by having the best possible marketing campaign they could have? Are they thinking that the flows will go back to the way they used to once the pandemic is over? Are they planning on sort of building out their businesses in other ways now that they've acquired these new clients? How are they thinking about what happens next?
Well, I mean, I think that they had a period where they were, first of all, just trying to understand what was happening. And I think once they caught on to what it was, I mean, it was really positive for them. They say over and over again that the main obstacle in convincing people to change behavior with their money is trust and an underlying suspicion. So if you've been doing the same thing with your money for decades, and it seems to have worked more or less, you're not generally prepared to take a risk on something new. So it's always been the main obstacle for them, the convincing people to use a product for the first time. And so this is provided kind of almost a captive market for them, where they're suddenly the only game in town, at least for a certain period of time. Now the borders have reopened, the kind of informal networks can operate again, but in the period when they they were the only option, they had a lot of people that were trying a service because that they wouldn't have tried normally. And for them, I mean, they see this as not something that people are going to back away from when the old options come back. Particularly these fintech-driven solutions are, first of all, easy. So you can do it just from wherever. You don't have to walk down to the bus station and find your bus driver and hope that it's the same bus driver you used last time. The recipient on the other end doesn't have to wait for the physical money to arrive. They don't have to, there are all sorts of kind of logistics involved in using informal networks that make them very cumbersome. Also, it's cheaper. It's cheaper to send via these fintech platforms, these digital services, and so I mean the companies say that they have every reason to believe that these are customers that will stick with them, and since so much is word of mouth, there's going to be kind of an exponential knock-on effect, they think. I mean, it's kind of a moment that they've been waiting for. And yeah, I mean, we'll see, but it should, and the central banks are happy about it as well, obviously. And I imagine people that are trying to analyze the data are quite happy as well. There's more data on transfers is captured. Central banks have a better idea of how much money is coming in. They can also, they can regulate and tax the services and make money that way. So, I mean, I think there's a general kind of positive vibe surrounding it.
Lior, this is something that you study, right? You've been studying sort of wage digitization and getting people onto mobile money platforms. You've been looking, I know, in Korea at different mechanisms for sending remittances. What do you think this big shift towards these other channels, these digital channels, might mean for financial system development, for the microfinance industry in various countries?
So from all the work we've done, once people start using a digital payment, even if reluctantly, they stick with it and they like it. There's work I've done in Bangladesh where we helped factories digitize wages. After the wage digitization, we asked people, which method would you prefer? And although ex ante, they said they wanted to stick with cash, ex post, the vast majority said, I prefer the digital and I'd like to continue with it. Joe also mentioned the impact of social networks, which is really important. In Korea, we're working with a large fintech which sends money back to the rest of developing Asia from Korea for low-income workers. And we're finding, a large impact. So users get a small bonus, cash bonus for recommending friends and being able to leverage that data to understand people's usage of the data, especially to optimize their exchange rates, the data they send home. And we are finding the impact of peer effects. I will mention, one important policy measure is earlier in the lockdown, a lot of the mobile money agents weren't considered essential businesses. And so this formal mechanism for people to get money home was threatened. And so although, it wasn't no longer feasible to send money home in cash, even domestically. The buses may not have been running. It wasn't safe to travel within the country. People trying to use, Pakistan, for example, the merchants who were the typical mobile money agents were forced to close during the lockdown. And so it's really important as we move to these formal channels to make sure they stay available. Can I end with a great story?
Absolutely.
So in Somalia in 2014, we asked people, how do you send money home domestically? And the vast majority said, I send using my phone. And we went back to the data, and like less than 10% of the people who said they're using a phone had a phone, and there was no mobile money product on the market. We're like, oh, damn, this data is all, crap. And when we went back and asked the people, what was going on was, you work in a rural area. What you do is basically the one guy with a phone became a local banker. You gave him your money. He, not quite legally, he added minutes to his phone. He sent money to the one person in your mother's village with a phone, who then, somewhat legally cashed it out for money. And your mother was lucky to get 50 cents on the dollar. And very quickly. And so, although there is this learning, these people very, very quickly understood that they can go from 50 cents on the dollar to 98 cents on the dollar by sending it via the formal mobile money products which were introduced to the market. And by 2017, we saw the majority of domestic remittance payments being sent via mobile money products. And so, this is an opportunity for the market to seize the opportunity that people understand the challenges, they understand the real and monetized costs. And it's not only convenience, it's the safety of the money, it's the safety, it's the cost of using the formal channels. This is potentially an opportunity to increase the shift from cash to safer formal modes of payment.
Yeah, digitization is a big topic in microfinance. Was probably going to be the topic of something like European Microfinance Week even before the pandemic, and now with the pandemic. But a lot of that focus on digitization has come from the supply side. The idea that MFIs need to digitize to lower costs, to be on the cutting edge, to compete with fintechs. All of these sorts of questions. I don't think there's been quite as much focus on the demand side, and that this other factor, particularly remittances, could be radically changing the behavior of customers, radically changing their comfort with digital channels, and because of the difficulties with cash in and cash out in a lot of places, one of those other big steps has been: will people ever be comfortable storing value digitally? Whereas, and we see most places around the world, even where there's heavy penetration, like Kenya and Bangladesh, most people cash out within a couple of hours of a mobile money transfer. That we may start to see that money is staying digitally and being exchanged several times digitally before ever turning into cash. And I think that has some big implications. A couple of minutes left here. I want to turn to a couple of comments we had. Leora, we talked about we don't have great data on the domestic side of things, but I know you pay attention to a lot of stuff. Do you think that because Joe mentioned many of these countries didn't really have the ability to shut down for long, do you think we should be as concerned about in-country flows as we are international flows?
No, those are good questions. Right. And so domestic migrants also, the majority work in the informal sector. But that's also construction, which we know has slowed down globally, at least for developed countries where we have data. And we certainly are hearing stories, certainly, as in the garment sector, for example, Bangladesh, Cambodia, of workers returning home to their villages because, when they're furloughed. The financial lives of the domestic migrants is so fragile to begin with that once they lose their income, they can't afford to maintain their residency and do move back home. I haven't seen any new data. We will be having Findex data is being collected at the moment. But I would suspect that there has, at least in the early days of the crisis, we did see domestic migration Although, for example, in the garment industry, we know that employment is again picking up and people are returning back to the cities.
So we are at our hour. I'm going to take just 1 minute here, I think, to summarize what I've heard. And thank you, Leora and Joe, for joining this conversation and sharing your thoughts. So for me, the big picture, and please, I'm going to just give a quick second there at the end, Leora and Joe, for you to feel free to disagree with me on what you think the big takeaways are. But for me, the big takeaways are, one, we underestimated how much migrants were willing to sacrifice to support their families, which is a dumb thing to underestimate. That we saw that, these are people who took incredible risks to go someplace to earn, to support their family. And when this pandemic hit, they sort of dug deep and, found ways to continue to get money to their families who are often more seriously affected than they were. Second, though, that the big story here is not about the volume of remittances. It's about the channels of remittances. That a lot of the ups and downs or the move into more formal and digital channels has masked an overall decline, even though that decline is not as serious as we thought. But that is a big story because it really can affect what happens next. What happens next in terms of overall flows really depends. This is a global economy question. And we need to be aware of how somewhat uniquely this global pandemic will affect very poor households and poor countries, not because of their local economies, but because of the global economy and its flow through to migration and remittances around the world. And then finally, there is potentially a huge opportunity for further development of financial systems here, as many, many people get their first experience of using digital technology. And as you said, Leora, we do tend to see that when people try it, they don't go back. This isn't a temporary blip and will affect the overall landscape. So I'll stop my comments there. Leora, Joe, anything that you would add to or disagree there?
I just wanted to add one thing. One thing that the money transfer service executives talk about is the boost that they also got from a loosening of regulations by government authorities that was recommended by, I think, the World Bank. So you had governments that that got rid of limits on amounts sent. There was a reduction by companies of rates, and the central banks and financial authorities and governments were very proactive in encouraging the shift to formal channels, just because it was known that the people. First of all, there was early on there was an effort to reduce the handling of money, physical cash, which is quite difficult in Africa, where most of these economies are cash economies. So there was an active force driven by the government to encourage this shift. And I think probably what we'll have to monitor now is to what extent is there going to be a return to business as usual in terms of regulation of those flows. We've seen that a number of those countries have already started to reduce that kind of support that they gave. But I think that would be a shame, because I think that governments, and I think probably some of them do recognize the positive aspects of this, that households are able to keep more money, that their central banks are able to monitor flows, that they can regulate these things much better than if it was going through an informal and potentially, questionably legal channel. So that's one thing that I would just add.
Excellent. Thank you for that, Joe. Leora, you get the last word.
Thank you for the invitation. And yeah, our job as policymakers is to make sure that poor adults working in other parts, supporting their families through migration, both domestically and internationally, can get the money home to their families safely and affordably.
Great. Well, thank you all for joining us. Thank you, Joe and Leora, for adding your thoughts. Greetings to all those that we didn't get to see in person this year at European Microfinance Week, with fond wishes that we'll be able to get together in person next year. Take care, everyone, again, and thank you for joining us. Thank you, Joe and Leora.
Thank you.
Thank you.
It's time for another break. Please come back in 15 for the last part of our program for today.